it's not a peace treaty. It's truce in the short run. And this is a perfect storm for Samsung, who's getting hit on all sides. Even Japan has thrown export tariffs on them in terms of 3 core ingredients that are restrictions upon them that are used into making memory chips. So if you think about the memory dynamic, you think about the smartphone dynamic, you think about the Huawei dynamic. Having said all that, Samsung has underperformed triple Qs by about 40% in the last year and a half. I actually think this is one of the best companies in the world. And despite these headwinds, I think the market is priced in an enormous amount relative to the peer group. At least within the peer group, I'd rather be long Samsung than be long a bunch of other chip players at this point.
So I like Nvidia here. Nvidia gives us exposure to all those high growth end markets that we want to play, whether it's AI, autonomous vehicles, data center, gaming. It gives us exposure to all of those. They had some crypto problems. They've kind of cleaned that out. I think it's priced priced at a really good level right now. I also like Broadcom as well. So Broadcom, gives you some exposure to the software space with their recent acquisition. So we do like software over semis right now. You have access to the software revenues as a diversification play. So we like that one as well.
I mean, AMD has outperformed. Intel, to Tim's point, has underperformed. I would say that you have to take some profits in AMD right now, even though there's been a bunch of positive headlines and rumors about being involved in next generation Xbox and Microsoft cutting Intel chips, adding AMD. I think you got to lock in your profits. I think it's up close to 70%. I don't know if I have that number right. It could be plus or minus 10%, but it's up a world. So I think take profits there. There's a lot of other spots in the chip market that I don't like as well.